Hello, everyone. Second attempt at setting up this live stream this morning. Really plagued with technical glitches. Right, we are ready to roll. Thank you. First of all, thank you so much for your patience and joining us this morning for a look at the Forex market through the prism of VPA. Hopefully, we've got some time to have a look at Bitcoin because that's doing some amazing things at the moment. But I think I'll go straight to sharing my screen. There we are. Where's it gone? Down there. There we are. All right. Those of you who were with us for the session at the beginning of the week, the sort of topic of the live stream was to try and how to establish what kind of market condition we can expect when we come to our screens to trade. And one of the ways we looked at with an example from cable was to see what the slower timeframes were doing and using the structure of the chart itself, using support and resistance levels, which, as I explained on Monday, you can do manually, or as I do, is I use our quantum trading Camarilla levels. And as I explained on Monday, these are levels that are calculated for us for time frames up to but not including the hour. They are refreshed every 24 hours. So every time the market rolls over at what is it, 10 o'clock our time, you will get new levels for the next trading session, the next trading day. But the interesting thing about this indicator is that on the hourly chart up to and including the day, the levels are there for the whole week. And it's really, really interesting because this is the hourly chart for cable that we were looking at on Monday. And during our live stream, we were here. We can see here there'd been a nice move higher at the London Open, which is 8 o'clock. These are all, by the way, London UK time. So when you see 8 o'clock, that is that is when the London Open is for us. Obviously, a different time in different time zones. And we were here. We were talking about here between 9 and 10 o'clock. And what I explained at the time was the most interesting thing about the chart structure at this time was, first of all, where was it in relation to the Camarilla? And we can see here we have what's called the R1 and the S1. And this zone, if you like, this area, as denoted by the Camarilla, is what's called a buffer zone. It's a neutral zone. For all intents and purposes, it's a moving sideways zone. And whilst this is the hourly chart, in that candle there, well, certainly in this candle, there would have been a trading opportunity on the faster time frames. In general, cable really isn't going very far. And we also looked at how the pivots help us to mark out the beginning and development of a congestion zone and the end of a congestion zone. And it's not, we have one here, but they actually coincide with the top and bottom of the R1 and the S1. Because congestion zone, understanding congestion zones, recognizing congestion zones it's just so important. They appear in a distribution, they appear in accumulation, and then you look at what the volume is doing. But in this session, I really just want to look at it from the perspective of what the price action is doing and what it is telling us, what is likely, what is it anticipating in the session ahead. Well, this is Monday. And this was Monday. There wasn't a lot of news on Monday. I think I said at the time on Monday that all the kind of explosive news to do with inflation was coming the rest of the week. And in fact, we've had the CPI this morning for the UK, which has produced a little bit of a reaction. We'll have a look at that because, again, we've had volatility and we've gone straight back into congestion. So again, what kind of market are we facing? And I said on Monday, if you can recognize it, it will allow you either to step aside and wait for a better condition, a market condition where you are the probability of being able to take a trade is in your favor, and as I said, this is what we'll see later on. But I just want to finish talking about the hourly chart. So see, it went so. Now, when did it actually? So what we're waiting for, we're actually waiting for a decisive break one way or the other. And when it came at, we can see that's 15. This is on Monday. It was 15 is 3 o'clock in the afternoon our time, where there was a burst of volatility. We had a candle to the downside, a very nice candle. There would have been very nice trading opportunities in there, but look how long you would have had to wait for a good decisive move. It triggered the volatility candle, the volatility indicator, I beg your pardon, giving us a volatility candle. Sometimes people I've heard describe this as a master candle, but it's only recognized by the size of the candle. And and there was a lot of volume underneath it. And when you have this trigger, the immediate reaction is pretty much always a retracement into the spread of the candle. Now, what I also mentioned was that after the R1 and the S1, which tells us whether the price is in a sideways movement, is in a range, it's bouncing along what we call this neutral zone. The other two most important levels, if you like, in terms of the most important levels on the Camarilla is the third and the fourth. So we had that at 3. Then we had another one with the same amount of volume, and there really wasn't an awful lot of follow through. And we go back to VPA 101. We are moving towards the end of the session anyway, with in the American session, but you can see that the volume is dying away. The spreads are narrowing on the candles, and it's moving sideways, but you can see how much it's hugging this third level. So there is no decisive break lower, and it moves it along. We have a little burst of volume going in. I think that's at rollover, so you would expect an inrush of as positions are closed out. But you can see pretty much during the Asian session, it's kept to this level, and this is when we get to 7 o'clock. 8 o'clock this morning, where we had a little bounce up again. This is on Tuesday, not Wednesday. Today we had a little bounce higher. Again, it's the third level which is holding, and so it goes on. But it's this third level which is the important one, and in fact, wasn't broken until yesterday. Again, very similar pattern to price action here. You had a volatility candle at 2 o'clock. This is just before the cash open, the what we used to call the market open back in the day before we had 24-hour markets. It was always at 2:30 UK time. We call it the cash open, and volatility came in, participation, very high participation level. Again, I would consider this like a trap move, because you see, if you try and imagine the psychology of traders waiting for these decisive moves. I'm not saying they're going to be sitting through the Asian session, but they've looked at their charts, and yeah, things are moving, but they're not moving with any great degree of momentum, of pace. And so suddenly you get a candle that goes to shoots up there, reasonable amount of volume, ends up with a doji, which is really indecision. Sometimes you get a reversal. You look at that, then you get a big move to the downside. Great, at last, because we have been waiting for cable to fall. If you recall, on Monday, I mentioned this all important level that I'd taken off the monthly chart, and cable is below it. So everyone's looking for perhaps this to fall, also with the dollar to move higher, as we've seen on the Dixie chart. So you see this ton of volume comes in. Great. Now I'm going to go short. What happens to the next one? We have a ton of volume going in again. but it doesn't go very far. There's no continuation. And we have a sort of repeat that we saw at the S3 on the S4, and with the whole thing kind of fizzles out. And I suppose this is kind of it's symptomatic of this market at the moment. It doesn't really, I'm talking about market sentiment, I'm talking about the indices. It doesn't look like it wants to fall. It's got all the characteristics of a bearish, of a bear, a, a correction. I'm not going to say bear market. I'm going to say of a correction. It kind of is sort of half-hearted in wanting to go lower. And you look at the shape and the pattern of the daily chart, certainly on the futures, on the MNQ, which is the futures for the Nasdaq. You look at the SPY, you look at the QQQ. So in your gut, you think, yeah, it's really struggling. But there hasn't been enough of a trigger to get it moving. So when something happens and there's an injection of volatility, there's an injection of pace, there's an injection of momentum, everybody gets terribly excited and they jump on and they try and jump on the move, thinking, oh, maybe this is it. Waiting around for a decent move is tough. You have to be disciplined. So, and then what happens? It all comes to a grind, not a grinding halt, but a halt. And this is where these levels become really, really useful, because you can see here it stops again at the fourth and it does the same thing again, and away we go. So there we are at the moment with cable. Now, what I've meant to say on Monday, I'm doing my explanation and how I use levels, how I use it together, because S&R levels are hugely important. They're the element of volume price analysis. But over at Quantum Trading, which is our software site, David has done, I don't know, 20, 30 videos just on Camarilla, on how you use it. There are videos on every single indicator. We have a YouTube channel, and they're very short. So you don't have to sit there for hours and hours and hours, but they just explain different elements of how they work, what they will do for you, and why we think you should perhaps be incorporating them into your own trading. So that's what I wanted to say on the hour. But to move to the a couple of other things, this is the 1 minute chart. And again, we had the CPI this morning. This is at 7 o'clock. The data seems to be coming out. Back in the day, used to come out about 9:30, but it comes out at 7:30. Again, we have this. We are in consolidation, but above the S1. As I said, these levels are different to what you see on the hourly chart. Huge injection of volume because CPI has come in higher. Now, under normal economic circumstances, when the CPI is higher, the Bank of England would be expected to think of raising interest rates. Of rising interest rates, the currency should strengthen. That is the classic, if you like, explanation for that. But given here in the UK, we have no growth, we have rising unemployment, we have an economy that's basically in the toilet. What we have is stagflation, which is the worst of all worlds. But not everyone understands that. So what happens? You have an inrush of volume, you have a big up candle, but it triggers again this volatility because it's outside the true range for this particular time frame. What happens? You have a classic retrace into the spread of the candle, but we know it's probably not going to go because we've also got a wick to the top of the candle. So we have an anomaly, and then we have the classic reaction that you would see in whenever the volatility indicator is triggered. And this is where we are, except at the moment we are on the S3 on the R3 of today's Camarilla levels, and we've been bouncing around. Horrible price action, let's be honest. The attempt to break lower, just really sort of meandering. It's like a washing line at the moment. Lots of volume going away. Price isn't going anywhere. And the danger now is it goes back into the buffer zone, the R1 and the S1. Now we might get some movement with the US data later on in the afternoon. So if you are on cable, just hang fire, see what happens. What have we got in the US? We have, we've got PPI in the US today. So if we get a strong reaction in the dollar, then the chances are you may actually get it in the in the in cable as well. Just one of those days, one of those times of in the trading week and in the trading year where we just have to be patient. Now we've got other indicators that we could that can help you try and determine what the not just what the individual pairs are doing, but also the individual currencies. That's the CSI. But I know David, he's going to talk to you about that, and also a couple of other aspects of as I said, of trying to gauge this market condition. And I think actually, I think there is something going on. So I'll pass over to David.
Thanks, darling. And if you could just unshare and I'll share my screen and yeah, we'll get going there. And just for a change, where are we? And it's just got to take hers off. That's it. Okay, I'll share my screen. Where are we now? Diddle-a-doo. Now, question is, which screen am I on? Yeah, share. Yeah, it's only showing the individuals, not showing what I want. Stop sharing. I don't know why it's broken those up. Let's just try something else. Bear with me a moment. Bear with me a moment. Let's try that. Let's just see how that goes. What I wanted to do was I wanted to share my NinjaTrader screens, but for some reason, best known to themselves. Interesting. Okay, let's see if that works. Um, can you just see what you're seeing on your screen? Oh, okay. Fine. Good. Oh, okay. Let's get rid of that. Yes. Sorry about that. I don't know why it was doing that, but there we are. It was just showing the it was just showing the individual screen. I'm just going to move that out of the way, because that's annoying. Right, okay. Um, can you hear me okay? Perfect. Okay. One of the things that Anna was talking about was obviously this whole business of um, momentum, energy, volume, call it what you want. It is all about the whether the market is moving or whether it's going to be stagnating, whether it's in congestion, whether it will a trend. And there are lots of different indicators that we have to represent this. And I've not shown this before on live stream, but this is the tick speedometer. And we developed this indicator with two ideas in mind. First of all, to give us a visual representation on when we had energy in the market. In other words, when a trend was developing, when we had rising volume, when we had activity. And it is all to do with this whole business of activity, because with activity generally comes price action. And if you've got a lack of activity, then there is very little going on. And you can think of it in terms of, we've used many analogies over the years, but one of them particularly is if you were standing outside a very large football stadium, for example, whether that's American football, whether it's British football, soccer, whatever you want to call it, doesn't matter. You've got a big sporting event going on. Now, if you're standing outside the ground and the ground is relatively silent, you can assume there is not much going on because there is no noise. And it is this whole business of noise of the market that is then reflected in terms of price action, where we have tradable price action, which is moving and moving with some momentum. When something happens within the sports ground, whether it's a goal, whether it's some near scoring opportunity, the volume will rise dramatically. And you, as someone on the outside, you might not know who's scored or what's happened. But the fact of the matter is, you've had an increase in activity, and therefore you would know automatically that something was happening. And it's also interesting, and I'll give you another analogy. If any of you are familiar with Nick Leeson, who brought Barings Bank down, one of the sentences I remember very well. He's I think he's having a coffee somewhere just outside the pit where it was live trading, where it was the full outcry of live trading, where traders would trade within the trading pit, and he was on the outside having a drink, having a coffee, and then there was a huge increase in volume, and he knew instantly the market was collapsing, and that was to do with an earthquake in Kobe, I believe it was. And at that point, without even knowing what was going on, he knew the market would be selling off very, very hard indeed because the level of activity had risen dramatically. And it's exactly the same here. And what we've done with the tick speedometer, as I say, is twofold. First of all, it gives us this very visual indication of when the market has activity and when it is dormant. And obviously, dormant is represented with red. So whenever we get these red bands of color, we know the market, the activity here, let's call it that, the noise of the market is quietening down. So all these red areas signal to us that this is an area of relative inactivity, and therefore we've got to be careful. Where we get colors of the orange and the green, the orange is very much the average, what we expect to see when the market is ticking along. And then the green is really where we get punctuated with high volume, high activity, in other words. So as long as we have orange predominantly, and if we have punctuated with green, that's great because that tells us that we've got a market that's moving along. And then we get these volume bursts where we get activity coming in. So as long as we're in orange and green on the various timeframes, we know that we're in safe territory, and at least we've got tradable price action. But where you get these very extended, you can see here we're on euro dollar here on 15-minute, where you get these very extended periods of red. This was overnight through Asia. Then we get a little punctuation of green, so we get some activity through this period. Then we go into orange. Okay, it's tradable, and so on and so forth. So there's very little red so far on the 15-minute. We've got a little bit of red coming in now because we've seen it reflected on the faster time frames, particularly over here on the 5-minute, where we've got a lot of red. So what we're looking for with the tick speedometer, it's a very visual indicator. And what it's telling us, in addition to that, it's also giving us the optimum tick levels if we're trading tick charts. I'll go into that on another day. But essentially, this is a very simple application of the tick speedometer where we apply it to the chart, and it will give us a visual idea of when markets are moving, and we are seeing momentum coming into the market. Now, another indicator which is very similar in that sense is the volume point of control. And hopefully you can see that coming up. And the volume point of control, let's go to the 5-minute to start with. There we go. What the volume point of control does is it presents volume on the y-axis, in other words, on the price axis, as opposed to what we're normally looking at on the time axis. And what it also displays in a very visual way is where we have very high volumes here, and also where we have relatively low volume here, what we call low volume nodes. And of course, you can see the volume falling away up here, and it's falling away to the downside. On this time frame, we're on one chart here. The yellow line, the yellow dashed line, is the volume point of control itself. In other words, that signifies the heaviest concentration of volume that we have on this chart over this time period. And the way to use the volume point of control is very, very simple, because it gives us very clear indications of two things. First of all, when we are likely to see congestion, because if a price is approaching the volume point of control, this yellow line, for sure it is going to congest. There is no way it's going to move through there very rapidly. It's going to congest and build around that region as it did here before it moves on onto the upside. And the same here, we had the congestion phase building, and now we're breaking down to the downside away from the volume point of control. And in addition to that, we are moving ever deeper into these low volume areas, which is great, because if we're trading short, that's exactly what we want to see. Volume in this way, represented in this way, you can think of in exactly the same way as you would do in terms of traditional price support and resistance, where we come into areas where we've got congestion of price, then we're going to see the price itself congest again, and they can act as support and resistance areas. Now, volume point of control works in exactly the same way, where we have high volume areas, as denoted by these this histogram on the right-hand side, where we have these very high areas, we can expect price to congest, because it's coming to an area where you've got a dense concentration of volume which acts in the same way as price. In other words, it's going to bring that price action to a halt, because there are so many orders sitting there, either previous orders or traders trying to get out, traders trying to get in. It's a congestion of volume in those areas. But equally, as you can see here, where the price comes down to test a low volume area where there's little in the way of volume to act as a support in this case, the price goes through there very, very rapidly. And that's great, because it gives us an indication of what we can expect to see when price approaches any of these regions. And as you can see, the volume, it works in all levels across all the time frames. So if we go up to the 1 minute chart, pop that up, we've got a volume point of control here. So if we're coming down here, it's no surprise to see price congest. We break away, we come back up, we go into congestion again. Looks as though it's going to retest that level again. And that is what we want to know. We want to know in advance what is like to happen. And if we're trading this around this sort of price area, we know that on the 1 minute time frame, at any rate, it is going to congest for a period. Now, obviously, everything is related to time. The slower we go down the time horizons, we go down to the 5 minute. Clearly, that's going to spend longer congesting in that phase than on a 1 minute time frame. Everything is relative when we look at the concept of time. So the volume point of control is hugely significant. As you can see, it works across all the time frames. I've got 6 here. And when we come down to the daily, this is for cable. What's important here is that if the market continues to break to the downside, once we get down to this level below 133, probably about 132.80, something like that, that is where we have an immense concentration of very, very high volume. And therefore, as a trader, whether you're on a faster time frame or a slower time frame, whether you're a scalping trader or a trend trader, doesn't matter. The fact of the matter is that when we get down to this level, I can guarantee you one thing: the price action will congest, and it'll probably congest there for some considerable time, because this is a daily chart, and therefore the volume sitting here is massive. Now, once it starts to break away, if it started to break to the downside, then this would be a very, very nice area for you to trade longer term, because from 132.80, let's say, down to roughly 130, the concentration of volume here is much, much lighter. It's about a third of what it is at the volume point of control. And therefore, as it breaks down into this region, this low volume area, it should move through there pretty quickly. So it will collapse in price pretty dramatically. And then, of course, the opposite comes into play, where we have much, much higher volume here from 130 down to 127. So this is almost certainly going to act as some sort of support. And in addition to that, if you scroll over to the left-hand side here, you can see from a price perspective, we would have a similar platform building here at around about the 130 area. So again, it's a question of this whole business of congestion. We've looked at those two indicators. We have the volume point of control, which gives us a very, very clear idea of when volume is going to act as support and resistance. And also, we looked at the tick speedometer. And finally, just to round off on this topic, let's go to another workspace, which is the accumulation distribution indicator, which is this one. And this, again, is a very visual way of looking at support and resistance. And what the accumulation distribution indicator does is it paints these levels for you visually. And in very simple terms, as you would expect, the stronger the wider the level, the more demonstrable the level, then the thicker the line, then the stronger is that region. So where we have, and that's also denoted, let's just pop this up full size, make it a little bit easier. That is also denoted by these little numerical values here. So this level was tested once. This level, which is a little bit thicker, was tested 3 times. This level, which is a little thicker still, was tested 4 times. And this red level here was tested 7 times. You can see the strength of it here. The beauty of the indicator is that it does this for you all automatically. You don't have to draw those lines in. It does it automatically, and it paints them on the screen in all time frames. And of course, once they are breached, as appears to be the case here, then what was resistance coming up to it becomes support, the other way around, in other words. So support becomes resistance, and resistance becomes support. And they work in all time frames. Do we go down onto the 15-minute here for cable? There we are. Again, we've got some very strong levels here. We had a very strong channel of a ceiling of resistance, which was breached here, and a platform of support. And that is, it's sitting on that level as we speak. And that is why one of the reasons why the price action is being propped up, because we have this very strong level here developed on the accumulation distribution indicator. As I say, works in all time frames. And these levels will constantly rebuild and rebuild within the price action. So as you can see, they are constantly moving. They are constantly becoming stronger, or perhaps becoming weaker, becoming less relevant. We've got another level building up here on the 1 minute. Let's just pop that up full size. So you can see here, we've got this level here at 92. Very strong level. It's been tested 7 times now. It's been tested 8 times, 7 and 8. It's flicking between the two. And if that is broken, then that becomes support. But at the moment, it's acting as resistance to any move higher for that particular currency pair. So there we are. That's just rounding off the topic on the whole business of congestion and identifying where we are in the phase, and the indicators that will help you to identify levels and also activity in the market to help you get into trades where there is that demonstrable trading opportunity. And as always, the starting point, let's just go back to finally the workspace for CSI multiples, which I hope shows up this time. There we go. And what we're looking for here, again, in the same way, we are looking for trends. And what we want to avoid is those areas where price is in congestion. And the CSI delivers that as well, because where we have currencies which are rising together, for example, we've got the dollar here, we've got the yen here, we had the green Swiss franc that was rising. So in terms of combinations of currency pairs, there would be no trend there because they're all moving in the same direction. Equally, the Canadian here, the Aussie, they're falling together. There's no trend because they're both falling in the same direction. Equally, New Zealand dollar, it's falling. So in terms of commodity currencies there, very little going on. You'd have to match it with something else. Now what's happening in terms of potential trend is we've got the New Zealand very heavily oversold, and we've got the Japanese yen right up at the top, very heavily overbought. So if I were looking at this now, I'd certainly be moving to the New Zealand yen chart on this time frame. We're on 5 minute here, so something around that area. And I'll be looking for potentially an opportunity for the New Zealand to rally, for the Japanese yen to fall, and we'd be into a trend. But for the time being, looking at all these other pairs, and when they're all moving around in the congestion phase like this, there is nothing going on. So we've got the pound here, it's moving with the CAD, it's moving higher with the euro, moving with the dollar up on these fast time frames. So there would be nothing to trade there. So this is all about picking out those trades, not wasting time by sitting watching a chart which is going sideways. We want to see breakout, we want to see trend, we want to see activity, and we want to see momentum. So there we go. I'm going to stop sharing. We'll go to and we'll come to the end of that this